All right, ladies and gentlemen, welcome back to another episode of another food and beverage brand, another big food and beverage representative here. I have my friend, advisor, Amy Haas on the program with us. Amy, thank you for joining us.
Thanks for having me.
So I'll give a little bit of background on you just for a second, and I'll butcher it, and I wanna kick it to you for the audience. But Amy was the former CFO of Simple Mills. Obviously was acquired almost maybe to the day like a year ago. It's January 8th that we're recording this, so maybe it's like almost like the 365-day
I think around when
anniversary.
we announced it, yeah.
Yeah, yeah, okay, yeah. When you for the announcement, I remember. So Amy is a Chicago native. Are you from
Yeah.
Chicago? Yeah. Okay.
Yeah,
So
from
from
Glenview.
Chicago, Simple Mills is a
hmm
Chicago-based company, acquired by Flower Foods for 795 million, I
hmm
believe, off of like one round of funding that was done by a couple other Chicago groups around here. So big Chicago success story. Amy's also got involved with Iris recently and in helping us kind of build out some of our products. So Amy, welcome to the program. Tell us a little bit about yourself and how you got started in CPG and how you ended up with Simple Mills.
Awesome. Well, yeah, no, super excited to be here. So, yeah, I'm from Chicago. So a little bit about me. I live out in Glenview in the northern suburbs. I have three girls. Yeah, so how I got started in Simple Mills. So prior to Simple Mills, out of college, I worked at General Mills in Minneapolis.
Okay.
Then
Is
I
there a connection? There's no connect. It's just mill. What's a mill? Is a mill
yeah, like a flour mill.
like a mill?
like
Okay,
a like
sure.
a
Okay,
kind of like, yeah, for sure. I mean,
like a mill.
there is
Yeah,
somewhat of a weird connection there, but so I was at General Mills, and then I wanted to move back to Chicago, so I then went into consulting at PwC. I was there for about 3 years, and I was super passionate. I still am, but about health and wellness. So I'd always at that time contemplated, like, what am I doing here in finance? Like,
Mhm.
what if I just, go back to school, become something health related, nutritionist, physical therapist, something like that.
Oh, cool.
And was thinking a lot about that when I got this random LinkedIn message from Caitlin Smith, the founder of Simple Mills. And I saw it, ignored it because I was like, who is this, random person? And then I got a follow-up message
Wow.
from her, and she literally wrote something really silly like, funny, we have a connection. You worked at General Mills and I used to be in consulting and I consulted for General Mills, so we should chat. I was like, all right, sure.
I'll take the
So
call.
anyway,
Yeah.
yeah, so there was a General Mills connection. And I then went and met with her in the office. And, at the time, like literally office was, 2,000 square feet. It was this
Where
tiny
was it?
closet
Hey, hold
in
on.
Chicago.
My office is 2,000 square feet.
Sorry. Um, yeah, it was on Wells in Chicago. And,
Wait,
I
that's
walked
where we
in.
are. What was the
Really?
address?
Was it 440 or 444, something like that, Wells?
Okay, we're technically on Institute, but it's well
Okay.
like Wells in Chicago. Like,
No, so we were pretty much like one block away from the mart. So it was Wells
oh,
and
okay. So you're south. Okay, okay. So we're
yeah, yeah, yeah.
Chicago.
Okay.
We're
Wells and Hubbard, I
Chicago.
think it
Okay.
was. Yeah.
Yeah. Okay. You're
Um,
okay. Okay.
okay.
Anyways, keep
Yeah.
going. I was like, that would be crazy.
Anyway, so went in there. They had like a handful of employees. I met with Caitlin and I just was sold from day one and just was super excited about the opportunity. And I remember telling, family and friends I was gonna, jump ship and go work for this tiny startup, which at the time was, maybe $500,000 of sales. They were a baking mix company.
Oh, really?
If
That
you
small?
knew the business in the really early days, they had this like ugly green packaging that she printed on her computer at home. So it was like there's no like if you would have looked at this
Yeah.
company from the outside, there you would have like not guessed that this company would have been successful. But I don't know. I just saw something in Caitlin. And I remember interviewing, okay, I got the offer and I talked to one of the employees at the time and I was asking her a bunch of questions and she was like, there are tons of startups out there. This one's going to be successful. This one's going to make it. And I was like, great, I'm in. And I
Perfect.
took the
Yeah.
job. So I think it was just like naive excitement. So yeah, when I started, took over all of finance and all of operations, had a finance background, had no idea what I was doing from an
Yeah.
operations side, but just kind of dove in and, like loved every second of it. And then obviously we slowly built out the team and then I just kind of focused on finance and yeah, it was incredible.
And had she raised, I don't even remember like what the funding was. It was like something, I mean, had she raised that money yet? That like seed money?
Yeah, and I don't know the exact timing. I think she was kind of in the process of closing the Series A. So if I
Okay.
remember correctly, I mean, she had probably raised about $5 million at that point.
Okay.
So definitely had some proof of concept in terms of equity
Yeah.
backing.
And was I right in saying that it was one round, or was there more than one?
It was two. We did a Series A,
Okay.
and then like years later, we did a small Series B.
Got it. Okay. And was
Yeah.
that it was like, I mean, we met through a mutual investor where it's a group
Yeah.
called Hyde Park Angels here. It was them, and then like was there another group? Bridge,
Charlotte
was it?
Capital Partners. So those were the predominantly two
Okay.
venture groups that were backing it, that were really with Simple Mills from the
Yeah.
get-go all the way 10 years through acquisition.
Which 10 years, yeah, like that's a journey.
Yeah, yeah,
That's
yeah.
did you when you took that job, were you like this is gonna be a 10-year thing, or were you like, or did
Oh,
you even think
no. I
about
mean,
it?
I thought,
Yeah.
it would be, I think none of us really expected to be there the long haul. And it
Yeah.
just, yeah.
I'm looking for a new opportunity. She literally cold DMs you on LinkedIn. That to me is, imagine if you just never replied to that, how different your life would
Yeah.
be.
And actually,
Um,
it's funny. It's like, that's how she found our whole exec team, was just
really?
LinkedIn messaging people.
Were
Yeah.
you
She found our
working
whole
like
marketing
with
head.
like food companies or something at PwC, or how did she pick
No,
you out of?
no. She just kind of how she is, and she probably wrote up a job description and was like, I want to find somebody who has some CBG experience and consulting. So she like looked for those two together and then came
Fair
across my
enough.
profile.
I guess that
Yeah.
works. Yeah.
Yeah.
Um, okay, so you join. She's raised like 5 million bucks, has like 500,000 in sales. You're taking over, um, finance and ops. Is it like an online business at that point, or like how does it look? What are you selling? Like where are you
Yeah.
selling? Like
So
how did the business grow to like 10 million? Tell us.
she started on Amazon and like quickly became the number one muffin mix on Amazon. I don't know how big the
Okay,
market was of muffin mix on Amazon at the time was, but so it had some early success on Amazon and then was selling into retail. So I believe when I started, she was in a few regions of Whole Foods, some other natural, it was mostly just natural. So like,
hmm,
Vitamin Cottage, things like that. But we literally, I mean, the company was so small, we would meet in a conference room every week and go through every single Whole Foods location sales to see how they were performing. And then
wow.
someone wasn't doing well, we'd call them up. So it was very kind of hands-on, store by store.
And is that kind of like where it started to like really kind of go up into the right, is with Whole Foods, or how did, like, tell me about like the sort of the first inflection point that you can remember in
Yeah.
terms of like,
No, I mean, I mean, baking is a slow category. It always was a strong part of the business, but like it was never going to be, a huge growth driver for us. And
yeah,
so I think quickly early on, we knew we had to expand into a new category. We were going to do something else, which I won't share, but it didn't work out for another reason. And I remember Caitlin had gone home, and Caitlin, obviously, I don't know if you knew this, but she actually developed pretty much all of our recipes in the early days. So
I did
she
not
did
know that.
baking mixes, the crackers, the cookies, etc. So
Oh well.
she was playing around in the kitchen, and she took one of our baking mixes and came to work the next day with graham crackers that she had made out of the baking mix, and they were phenomenal. And I think I was like, "Hey, Kaylin, like we should make some crackers. These were awesome." And she was like, "All right," and just started playing around, and one thing led to the other, and she developed our almond flour cracker recipe, which, to be honest, was incredibly difficult to develop. Just trying to create a cracker that kind of had a wheat thins like texture, but used
Dude,
our ingredient profile that had no grains, no gums, etc. So it was very challenging to manufacture. But once we got it right, like that just took off, and I feel like that was really
yeah.
the key point for the company.
Wait, so yeah, so let's take one step back in terms
Yeah,
of Simple Mills. Like, what is the primary value prop as far as like the differentiation? I mean, I know what it is, but like how,
yeah.
like, why was this like a good idea, and like why was it like early to the trend? And tell us a little bit about that.
Yeah, so it's interesting if you look back, like in the early days of the business. So Caitlin was gluten free. She was also dairy free. She also, I mean, if you heard her story, she had a bunch of health issues, cleaned up her diet,
Hmm.
looked at the baking mix category, realized everything was just full of sugar and junk, and wanted to make something better. But, at the time, like the industry was very focused on kind of gluten free being a differentiator. And
Yep.
our competitors at the time were kind of these legacy brands like Pamela's and Glutinos. And so we were gluten free, and that was kind of all over the packaging. But really, what differentiated us was the clean ingredient line. So, like
Yeah.
simple, clean, nutrient dense ingredients. We always had a nutrient dense number one ingredient, which
Hmm.
for our early products was always almond flour. And then the other big thing that was important for us was just on taste. So like the fact that we had this incredible ingredient profile, that was table stakes for us, but our products
Yeah.
tasted awesome. And so we were
Hmm.
really trying to reinvent kind of those staples that you had in your kitchen.
When did you start?
I guess initially started, I think it was around 2012.
Okay,
But then in 2014, that's when she was at Booth and she won the New Venture Challenge. She started getting funding. So I'd say that's really kind of when things took off.
I
And then I
see.
joined in early 2015.
Yeah, it's so fun. It's like I wish I was like more into. I mean, I was like 14, but like I wish I like see like the impetus of like the whole better for you thing because I feel like
Yeah,
now it's like all like culminating. Like you're
totally.
like Simple Mill is 800 million. Poppy's, I mean, Poppy's a little bit later than you guys, but like 2 billion. Like it's like these things are all happening now. Like they're all like
Yeah.
coming to. They're like it's true. It worked, and so I'd be really curious, another time to kind of hear more about like how that all kind of came to be and like what it was like before that. I mean, and I forget who was I think I was talking to Holly from Centerview and like we were
Mhm.
kind of talking about like think of like your pantry when you were like a kid, like Kraft Heinz, like Kellogg's, like it's all dead, like none
Yeah,
of it like
totally.
they're splitting up. Like it's kind of a true like changing of the guard. And one thing that Sam McBride said too was like a lot of like a lot of like the VC money these companies have grown really big and are doing really well, and at the
Hmm.
same time a lot of those strategics are kind of breaking up, and so it's like there's a little bit of like a changing of the guard going on
Totally.
because they're not really going to be acquiring because they're breaking up.
Totally.
So
And I think
it's
that
a
was cool too, like being an early employee and just like watching the industry change. When I first started, obviously no one had heard of Simple Mills in my network, but
yeah,
I was obviously a very hardcore health consumer. And the only
yeah,
people that knew of Simple Mills were people who kind of had similar eating habits. But over time, you just saw like more and more people became fans of the brand, and that now obviously like it's table stakes. Everyone knows it, which is
right.
cool because you see kind of more of your conventional shoppers a big fan of a brand like Simple Mills, which is really cool to see right now.
And like how many people would was Simple Mill or is Simple Mills today?
Today, probably around 125, I'd say.
Yeah, it's crazy. And
Yeah.
were you who else was there when you joined?
So when I joined, there was a few early employees that didn't stay with the company that long. So I would say I was the
Okay.
longest tenured employee.
Oh, you were. Okay. Oh, that's
Yeah.
cool. Um,
Yeah.
okay, so then back to the timeline. So
Yeah.
you joined was it like you joined and then it just like took off immediately, or was it like there's a couple of years of like figuring things out and like what were the drivers? Like what did you guys get right? What like tell us about like the
Yeah.
early success.
Yeah. So, I mean, I would say, like, looking back on it, it was very successful from the get-go. I don't think it felt that way because, like, when you're in
Yeah.
the trenches of it, it just everything felt very challenging. But
Everything's terrible, yeah.
totally. So the first year, I think we just did the baking mixes. It did very well. The second year, 2016, is when we launched the crackers, and that was just instant overnight success. And I think really just kind of blew us away.
Wow.
I think what was also really exciting is, we got into Whole Foods really quickly, got national distribution at Whole Foods with the crackers. Those did really well. And then pretty quickly on, we got accepted into Costco with the crackers. Started in a few regions. And actually, the demand from Costco was so strong that we couldn't keep up with it. And we actually had to
Yeah.
tell them, hey, like, we got to slow this down. Like, we
I
actually, I
was
think,
gonna
took a
say
break.
that's kind of a
Yeah.
crazy to go from Whole
We didn't
Foods
have
to
enough
next.
manufacturing. Yeah.
Yeah, Whole Foods to Costco is like kind of a crazy jump.
Totally. I think one of the challenges we had in the early days with our manufacturing, because it was all outsourced, is, we were nut based, obviously made of almonds, but we also were peanut free, and then gluten free, and some had some of these other allergens that we didn't have. So there wasn't a lot of manufacturers who could kind of meet all of our unique needs. And
I
so
see.
had to be pretty creative.
Were you outsourced manufacturing the whole time?
Yeah.
Okay. That's yeah. That would be like I would almost expect you to like in-house it at some point if like because like I'm sure like you can't do well, can you cross is there like any cross contamination at all or
No. Yeah.
yeah it's like not even the same facility yeah
Right. Exactly.
yeah
So,
that's crazy
well,
or like
don't quote me on that, but yeah.
it's a big constraint is my point.
Exactly. Exactly.
Um, so Costco was Costco just like you said you got to slow down but like did Costco kind of take you guys all the way like so I guess what I'm hearing is like you joined
Yeah.
there was a lot of traction from that point on and it basically became Whole Foods Costco and then like was it Costco into the sunset or like tell us a little bit more about like
Yeah.
the I'm going like up the revenue curve if you can
Yes, I
tell.
remember we started with Costco. We were in a few regions. It performed extremely well. We then had to take a break because we didn't have the capacity to support that. I don't
Yeah.
know, maybe we waited 6 months. We got another co-manufacturer in play, and then we kind of hit the gas on Costco, and that quickly just grew really fast. We slowly went into all the regions. We became everyday items, became a top selling item there. But kind of as we were growing there, we obviously started performing really well in the natural channel. So we quickly
Hmm.
became the number one baking mix company, the number one cracker company, and then eventually the number one cookie company in the natural channel. And then started expanding in conventional. So that's when we started getting distribution in Target and Walmart and Albertsons and Publix
Yeah.
and all those big conventional players.
And so then I think like I'm looking at my write up from when the acquisition happened, and I can't remember if like all these revenue numbers are totally public, but like when they announced it, or if I'm making guesses in which I
Yeah.
oftentimes do, but it looked like 2022 to 2023 was like a pretty big jump.
Yes. Yeah.
Um, so it's like it wasn't necessarily like, you've got I've got 70 and then like 100 and then like 128 and then like 150, but then a big jump like over 200 in that year. So
Mhm.
it wasn't necessarily a hockey stick from the beginning as much as maybe a straight line, and then it accelerated over time.
Yeah,
Uh,
I think that if I'm trying to remember that what really took off around 2023 was so initially we were baking mixes and then we were crackers and then had expanded into cookies and then bars. But
yep,
even though we were in these four different product categories, such the bulk of the business was crackers. And I think a lot of people viewed us as a cracker company. And
59%.
then yeah, exactly. And then we had developed this Sweet Thins product. So Sweet Thins, I don't know if you've tried them, but they're kind of like a healthy, adult-focused Teddy Grahams. They're delicious. I mean, it's
Okay.
like watermelon seed flour. And so we launched that, and that also just took off.
Okay.
Costco, everywhere, Target. And so I think that was one of the big pushes where we became not just a cracker company, but also a cookie company. And so we really were this multi-category snacking brands. And we started really performing in the conventional channel. So what I mean by that is we had distribution, but
Yeah.
we were maybe doing well, but not amazing. And all of a sudden just became a top performer in conventional as well.
And so how like what's your sense for like obviously more revenue is oftentimes good. But
Mhm.
you mentioned something interesting there, which is being multi-category. Like
Yeah.
how important is that in terms of like being an asset that somebody's going to come around and pay $800 million for?
Yeah. Yeah. That's an interesting question. I think that was always what Caitlin's vision for the company was to be this
Hmm.
multi-category player. And honestly, I think Simple Mills with the ingredient tenants and what it stands for and just even the name Simple Mills, like we had permission really to play in so many areas of the grocery store, which was really
Yeah.
exciting. At one point, we were like, oh, this is actually really complex to manage multi-categories. Because if you think about it, manufacturing cookies is really different than manufacturing crackers, which is different than manufacturing bars. So it took us some time to realize, like, let's just be thoughtful as we expand into new
Yeah.
categories because, like, if you take your marketing budget and now all of a sudden you're dividing in four among supporting all these different categories, it's much more expensive, much more complex. So that was a consideration.
That
I
sounds like a
think
nightmare.
there were some challenges, but we made it through.
For anybody
Um,
who's like managed a supply chain, like I like no thank you.
our
Yeah.
our head of operations is a saint. I'll just say that.
Yeah. Like oh my God.
Yeah, I mean, I think that was a consideration. I also think when brands do that, it can be tricky because a lot of times when they expand to new categories, the consumers might not understand like why are they playing this other category? You really should just be here. And I think
Yeah.
maybe what we did right was we expanded pretty early on in the business to these different categories, so we kind of had permission to play in a lot of different areas.
Yeah, I think like there's something like so there's this concept of like trend hopping,
Mm-hmm.
where it's like you want to be able to like hop across trends, but I think like complicating that by also going like across categories, like that is to me like one of the unique parts about Simple Mills. So like Flower Foods, they've given quite a bit of information about the company.
Yeah.
Um, like 25% was my blues are all pretty blue, but like I guess 59% was crackers,
Uh-huh.
25% is baking mixes, 10% cookies, 6% snack bars. Does that sound right to you?
Okay. Yeah, sounds
Um,
about right.
yeah. So like I guess what if there's like a trend in cookies that's like zero sugar cookies, but it's like a different
Hmm.
trend in snack. Like, was there like any like risk or like complication from that standpoint, or was it like we're gonna go all in on like being almond flour for all these categories or whatever it was?
It's a good point. I will say, and this is our CMO's genius was like her and Caitlin as well. Like as they developed the company, really what the strategy was. Like we were
Hmm.
never focused on the trends because if you think about it, there were so many trends that came and went. So if you think about
Okay.
keto, paleo, or
Yeah, yeah, yeah.
whatnot,
Yeah, that
and
was through
and
all of this. Yeah, yeah,
yeah,
exactly.
exactly. And like and paleo is actually interesting because and I'm not going to quote this exactly, but like I believe the products would have qualified as paleo, but we never really marketed it that way because we wanted to
Interesting.
be kind of evergreen nutritional principles of, these are just clean ingredients, like objectively, they're good for the majority of people, simple ingredient line, like they're always going to be try and true, like a trend. It's not going to be just
Yeah.
like something that's very trendy and coming and going. So I think in some cases, like that might be why certain aspects of the portfolio took off in different periods because things might have been more on trend, but that's not
Right,
really
right.
what you're focused on.
Was it a pretty volatile product mix over the years? Or
No, I will say, like, during COVID, things were kind of interesting. Like, the baking mixes took off during COVID, with when
oh,
everybody was
funny.
baking at home. But I'd say
Yeah,
relatively things are pretty stable.
yeah. Okay.
Yeah.
Um, that gives me a good sense for sort of the evolution of the business over time. I think what I always like to kind of touch on too is so I guess you guys that Series B must have been like pretty quiet.
Hmm.
I'm curious like you mentioned and you mentioned sort of like Costco picking up and kind of running really quickly like how so you step in as like I believe like vice president of finance and then ultimately CFO, right?
Yeah. Yeah.
And so like the business and you mentioned there was like traction from out the gate. So like talk about like if we're if there's mostly like finance type people listening to this like walk us through a little bit about like how you thought about like capitalizing the company if you weren't just going to go raise like huge amounts of equity and like what worked and like what would you
Yeah.
do if you were in the same position again having learned what you've learned.
Yeah, so I will say one thing that one of my best partners over the years was at the time they were Stonegate. They I think are under new ownership, so now they're SG Growth Partners. They're a lender.
Okay.
But after we hired the Series A, I think they bridged us from our Series A to our Series B. We then took out debt, and that covered our working capital needs during that time. So it really minimized the amount of money that we had to raise.
Yeah.
And they were just such awesome partners to us. And, over the course of the years, as I was growing into the role and learning kind of on the job, and sometimes we were caught by
Yeah,
surprise,
yeah.
like
Totally.
giant Costco splurges or things like that, where all of a sudden we're like, oh crap, we need more money, those sleepless nights. And they were kind of always there to kind of support us and give us whatever kind of unique arrangements from a debt perspective to help us carry us through.
And was it just like revolving stuff or like
Yeah, so we
factoring
had
or
some
like
revolvers. We also had some term loans, if I remember correctly. So we had a few different kind of arrangements. So I think that was really helpful. And then that really bridged us to Series B. And then pretty shortly after that, we got the private equity investment from Vestar. Um, and then after that, as the market was shifting, I think there was a big shift in the market to where we were previously more focused on high growth, and then kind of the second phase of the company focus on growth, but also profitability. And so that was a big step change for the company of really trying to ingrain those kind of financially, like trying to improve the financial acumen of really the whole company to help
Mhm.
drive profitability. And so then we were able to be cash flow positive after that point.
Yeah, it's I am noticing a trend here. So like I had Sean from Dude Wipes on,
Mhm.
Sam from RX Bar on, and you, and it's all these Chicago folks that seem to understand gross margin discipline at like an intimate level. Where it's like, these
Yeah.
models are tough. Like the model is hard. Like you have to have like scale, and if it'd be very, very easy just to like, not try to be somewhat cognizant of unit economics, at least in like the
Yeah.
early days. And like Sean didn't really raise any money, like Sam and them didn't raise any money at all.
That's
Um,
crazy.
yeah, which I some weird Chicago cheapness going on here.
Yeah, I don't know. Something's in the
It's the
water over
Midwest
here.
frugality. Yeah, yeah, the Midwest frugality.
Yeah, for
Um,
sure.
and so eventually then like so Vestar comes in.
Yeah.
And are you CFO by that point?
I believe right around then is when I became CFO.
Okay, so now like in some ways you're like a private equity backed CFO at that point, right?
Yeah.
Or not?
Yeah.
Yeah, but it was
Yeah.
minority deal though, right? So
Yeah, for sure. It was minority,
yeah.
but yeah.
Okay. So then like how is it how did things change at that point for you and just management broadly?
Yeah, there was a lot that changed around that period. Part of it was, Vestor came on board, but I think that's also right around when COVID hit. So Vestor invested in 2019, like and fall of
Yep.
2019, and then
Yep.
obviously COVID hit right after that. So, the second 5 years of my time at Simple Mills, it just was different in that, we were all remote. We also expanded the team pretty
Hmm.
significantly. And so it was a different phase of the company versus kind of like the small, Chicago base. We're all in the office. It felt
Yeah.
very starvy from the first half. Not that that was bad. It was just, it was different. It was kind of like
Well, it's
phase
time to
B.
grow up. Yeah, I mean,
We
you're
grew up.
you're
Yeah, that's exactly what happened. So I'd
yeah.
say it became much more complex. And I think we became much more thoughtful and strategic about how we were growing the business. And Vesta was awesome. They were fantastic partners. I think they really lived up to what they kind of presented themselves during that deal process of what they would
That's
be.
rare, yeah.
I feel like people always ask me what my experience was like working with them, and I had really positive things to say about their involvement. So I feel like that's sometimes kind of unique for a CFO to say about their private equity partner. So yeah, we
Yeah, well
felt fortunate.
that's a good like thread to go down.
Yeah.
Like because I think I mean I as a I'm an advocate for private equity.
Hmm.
For people taking on private equity capital because I believe that oftentimes these founders are like I mean, look, not everyone has a CFO at that point, right?
Hmm.
Like not everybody has an Amy Haas to kind of like do what they need to do, and they don't even know what that looks like. And a lot of these private equity firms can step in and kind of help you professionalize
Yeah.
because more often than not, like you need a little bit of private equity TLC to go and sell the business for, a true sum of money. So
Sure.
I'm curious whether or not you agree with that, I guess. Like having somebody that can come in and kind of like shape things up and then, flip it to the next guy. Is that like necessary? I mean, the only
Well,
example I can think of where that didn't happen was Touchland, they
hmm
sold to Church and Dwight for 880 million. I don't
hmm
believe they had any sort of institutional I
mm,
mean, they raised like a seed round. But like
yeah.
besides that, so curious your thoughts on that.
You know, So when we got the investment from Investor in 2019, at that point, we weren't exactly sure what the right next step was, whether we sold to strategic or went private equity. We ended up
Hmm.
going private equity. And I think we were just so, looking back on that, so fortunate that we did. Because I don't think the brand would have gotten to where it is today had we sold, so early on in the business. I think we were just too small. And so
Yeah.
what I'm really fortunate was that we had the investment from Vestar. We were able to really continue on for another 5 years and really scale this brand from, I think when Vestar invested, we were about 70 million, and then we went up to about 240 million. So they really
Yeah.
helped us get to a meaningful size in the market, and they were always really supportive of what the brand was about. And they knew, if you think about what was most important to Simple Mills, it was the mission, the brand, and its people. Um, and the leadership team that we had with Simple Mills kind of early on was really with best Simple Mills all 10 years. So they didn't replace the leadership team. The same people were still in place, and they really just got behind the mission, which was
Yeah.
awesome. I'd say one of the most valuable things they did for us was really push us to kind of make that transition from being just focused on growth to also be focused on profitability. And I think that was kind of the kick in the butt that we really needed. And I think
Yeah.
that's really what really helped us kind of hit this great milestone with the acquisition of Flowers.
So you're kind of agreeing, but not entirely, I guess.
No. I'm agreeing, and then I think they were really, really helpful. I'm saying I don't. I think they partnered with us and really kind of supported us, but also kind of helped us lead us in the right direction.
Yeah.
Yeah, I
Yeah.
am agreeing.
Okay. Okay. Yeah. I mean, that's I would love a data point. I would love to see Ray. I actually do you want to? you can probably dig this up. Like, what percentage of strategic acquisitions are like founder owned entirely?
Mm.
Not, but that's so tough though, because it's like, how do you get that far along without like, what percentage of brands are owned by some like legitimate private equity firm? And I'm not like venture capital.
Mm.
Like venture capital to me is still like founder, led and controlled and owned, but not that. But so is Simple Mills at this point, probably.
Right.
There's just because they're
Yeah.
minority. So it's like, where do you draw that line? I guess.
Yeah. Yeah, and maybe that's I don't know
because this is like
yeah.
a private equity fund. Like this is not like a venture
Yes.
capital. Yeah, like this is not like
Yeah.
a
Yeah.
venture
Yeah.
capital group. Yeah.
Yeah, I mean they were on our board and
Yeah.
in many ways. Yeah, for sure.
Yeah.
But I think maybe what was unique about Simple Mills, big given that we were private equity backed, was that we still had the same exec team leading the company pretty much since
Right.
the beginning. And so it's a lot of times private equity comes in and
Which is
makes
pretty
us
amazing. Like there was never like a CIO that they brought in that nobody liked.
No.
Like never, not once. Really.
No.
Yeah. That's pretty incredible because usually like you'll see like they'll push some CEO
Yeah.
even and like nobody likes the person and then it just like totally falls over. Yeah.
Yeah.
I mean, Ray, we need to look at some of our M&A wrap data. Which maybe that's a good segue then into if you guys follow me, you probably would have seen this piece that I put together that Amy was nice enough to contribute to about sort of like the state of M&A and sort of the outlook for 2026. And so obviously like Amy here has like the most firsthand experience, in the last 12 or 18 months or whatever it was. And so I asked her to contribute to that outlook, and I thought you had what you put in that contribution was very similar to what you said at one point on here today when you were like just the idea of like being like evergreen and just like
Yeah.
focusing on what works. Like, do you want to unpack that just a little bit for us? I want to hear that live from you.
Yeah, I mean, I feel like especially since I've in the last year since the deal and I've met a lot of founders or people in the industry and they're always like, well, what does it take to have this great exit? And I just feel like, one thing that we didn't really focus on was, trying to time the market, to a degree. Yes. You're trying to say, okay, like the business is doing well. What's the right time? But really it's kind of impossible to time it because the industry is just bananas right now in terms of what's going on. And so like, even if you think, hey, this is the right time, like the right players might not even be at the table. So it's hard to really time it. And so I just felt like we were always just focused on building a sustainable business that, we didn't even know if we were going to sell it. Like at one point, we were just going to continue on. You don't really know. And so I felt like that served us well because we just had this really robust business that we were so passionate on. And we were so fortunate to have Met Flowers and they were just a great partner for the business and kind of stars aligned with that.
Okay, so then how do you like I know you're and we'll talk a little about this in a second, but like I know you're like advising some earlier stage brands. Like how does that kind of translate into what you tell founders today in terms of like you're working with like a few different brands, I think.
Yeah.
So
yeah.
like how do you kind of coach them from that regard?
Yeah, I don't know. I feel like in some ways I think people are getting excited about some of these big exits that are happening. Which it's great for the industry, right? Like I think everyone should be really excited, but I think I feel like in many ways people should just put their head down and really just focus on building an awesome brand. And I think that's where my point is. And like things are going to come together if people do that versus really trying to perfect it for a specific buyer or specific timing. Because who knows, things are changing so quickly.
It's honestly a good point. Like I feel like so I started when I started like making content around like this industry, it wasn't like primarily like transaction focused in any real capacity. Like those things would come up. But then like when I started talking more and more about this stuff, like people just latch onto it. And it's like because everybody like wants to like sell their business at some point.
Totally.
It seems which like to your point, like it almost like is backwards, where it's like and like VCs will say this like don't if a founder has something about like their exit strategy in the deck, it's like a red flag. Like I probably agree with that where it's like I don't know. I mean like I mean, like, look, like, I understand institutional capital flows, and like
Totally.
if you raise money, like there's the expectation that there's going to be a
Yeah.
return, right? But like for me personally, like Iris is like, I mean, it's a ton of fun.
Yeah.
And like, you've been in like these like, product calls with us. Like it's fun and it's hard and it's, challenging, but like I personally, like there's nothing else I would rather do at this point.
Yeah.
Um, Granted, Iris was my idea, so I have that luxury, but yeah, I think, and I had a call with somebody yesterday, and a woman who DM'd me, who she was making cookies actually. So it's not actually super far from something like Simple Mills.
Yeah.
I forget. I wish I could remember the name of it. And I basically told her, just like, make sure that you like it because you're going to be doing a lot of it. So like you can't really get away from it. So I totally agree. I think,
Yeah.
it's kind of, it's rich coming from me as somebody who just like glorifies these giant M&A deals or whatever. But at the same time, having like literally the 10-year, vision for it, like that's how long it's going to take. And like to think that it's going to, like, I think the minimum was like 5 years or something,
Yeah.
and the
Mm-hmm.
median was like 22 or something. Like it's
Yeah.
like truly insane. And like, look, like, for 22 they might have flipped a few times, in that. Um, but
Well,
yeah,
I think you have a good point, and as I look back and I reflect on it, what was so special about Caitlin and what she was trying to do is in the 10 years, yes, of course, we talked about, down the road, would we have a transaction or, what would be the right timing? Of
hmm
course we did. We had private equity funding, we had investors, but
yeah,
that was really never the focus. The focus was on changing the food industry. And like Caitlin is just a visionary, and all she really wanted to do was make a huge impact on the world. And, she'll tell her story, but like when she thought about like, how can I help people, her thought was, I'm going to make a food industry because that's one of the ways I can make a really big impact. And so
yeah,
because of that, it was a mission backed team, and we hired people who that was their passion. And that, like in turn, because everyone put so much energy into it, that's what made the company successful and then led to a great outcome. So it was really about building the business and just that being the focus that actually helped us have such a great
yeah,
outcome.
and like getting the right people that are all kind of aligned and
Yeah.
passionate about
Yeah.
the same thing. Yeah, that's actually a pretty interesting insight. Like how did that, I guess, materialize in terms of the like the interview process?
Yeah.
Is an interview question like, how much do you like off, sugar free or like whatever?
It's funny is in the early days of Simple Mills, before we had HR and there was rules on what we were allowed to
Yeah,
ask and not ask, like, I actually think we had a question of, can you tell us about your pantry or like what types of brands are you buying?
yeah,
'Cause
yeah.
we were honestly really trying to screen for people who this was their passion and they loved natural food and making an impact on the food industry. And I think over time, which was cool about Simple Mills, was Caitlin expanded the mission. So it initially it was just about nutrition, and then it was people and planet. So we had a big impact on regenerative agriculture and
hmm
that side of it. And then so in the latter years of the business, we were looking for people who were passionate about something that we were doing. So whether it was helping the people, helping the planet, something about the mission of Simple Mills. And it was pretty broad. So it led to more diversity of the employees that we were hiring, but it was
Yeah.
critical that people felt connected to it.
And what did the office of the CFO, like what did that end up looking like from a team perspective? Not only just like the roles, but like the types of, I mean, you mentioned like this characteristic of them. So I guess I'm curious, like, how did you think about building your team over time? Like, who was the first hire? Who was the fifth hire? I imagine
Yeah.
that the department got pretty good at one point, like pretty
Yeah.
sizable.
I was very fortunate. I had a really, really strong team. I would say, initially we always, from the early days of the business, outsourced the accounting, worked with a few different accounting firms that were
Yeah.
great. And my first hire, trying to remember, I think I started hiring about 4 or 5 years into the business. So I kind
Oh
of
wow.
one man team for a while, and then started hiring some finance people. One of my initial hires was a woman named Lucy Tong, who's with the business for at least 5 years. She was
Yeah.
my head of FP&A, and then I hired an incredible controller, Maddie Cermak, and then they both had awesome teams underneath them. So yeah, I think we had about 15 people at the time of the sale.
That's like it's funny because like a retail company is just so different. So like my beauty company, Mad Rabbit, like I my first hire was head of ops, and
Hmm.
then like VP of finance, who was like kind of a controller type. And like you can get away with that stuff in like an online
Yeah.
heavy model until you're at 100 million, and then like maybe you need like another person. But in retail, and like we're kind of learning more and more about this, with
Yeah.
Iris and everything. But why is that exactly? Like why is it so much more people intensive when you have all these retailers?
Good question. I feel like is it, are you saying like retailers versus D2C?
Yeah, like there's more like I don't like we like a D2C company doing 100 million would never have like an AP clerk,
Mm,
or like an AR clerk or like something like
yeah,
along those
that's
lines. You know what I mean?
interesting. I think it's like the business model of dealing with distributors adds so much complexity.
That's what it is. That's totally
Yeah,
what it
I
is.
think that's
Yeah.
it. I mean, you're seeing it, just from our
Yeah.
calls as trying to understand all the dynamics of working with these distributors.
It's so
Uh,
insane. Like
yeah.
Mad Rabbit is in Walmart, and
Uh-huh.
like Walmart's the easiest thing ever. Like you don't even have to send it to them. They come and pick it up. They just come and take the stuff from you. They put it on their
Yeah.
shelves. They give you a check. When I started learning about like the grocery stuff, I mean it's so insane. Why does Kihi and Unify exist? Actually,
I
it's another
don't
good
know. It's
question.
a good
You don't
question.
know? Okay.
Why do they exist? I mean, I think there's so many small retailers that they serve that it would be nearly impossible for like, especially a smaller brand to be able to service all these small retailers. It also would just be so expensive if you were trying to ship, case of the product versus them consolidating all these pallets onto a truck.
So it's yeah, maybe it's like it's so fragmented in
I think
grocery.
it's so fragmented.
Yeah.
I think about it, like the number of, especially Simple Mills in the early days of the business, early on, we had Whole Foods, we had Sprouts, and then beyond that, it was just all these natural kind of one-off chains that were
Oh, really?
a
Is
good
that right?
portion of the business. Yeah, because they
Oh,
were natural stores. And so they all are pulling from KE and Unify. There's no way we could service each one individually. It just would be too time and capital intensive.
okay. I guess that makes sense. I didn't really realize
Yeah.
that. All I
Yeah.
know is I hate it. Like it's like
It's terrible.
so it's terrible. Like it's just a whole other layer of like complexity and data silos and all that stuff. So I guess
Well, especially when you can never predict how Unify and KE are actually going to buy from you. Like there's no rhyme or reason behind how they place their orders, and it'll just make you go insane.
it's literally just like
Uh,
hard mode. Like this is what I'm saying. Like a beauty brand that sells like online versus like a cracker brand that's like selling to like key. It's just like it's such a different business than like just seems
yeah.
like hard mode. Like even like just beverage in general. Oh my God. Like I was I went to this dinner that Wayne Wu, shout out Wayne from the
Yeah.
pod from VMG hosted in Chicago. And I was sitting next to Josh Belinsky from Slate Milk, and they're crushing, but like they've raised like you have to raise like so much money typically. Like that's like the other thing that's like kind of interesting about Simple Mills is
Yeah.
relatively speaking, given the capital intensity of the business, like you guys did a
Yeah.
really good job in terms of
Yeah.
not having to burn $100 million to get there.
I would agree. I would agree with that. I think that's where I feel like as Stonegate really helped us in the early days of being able to defer that.
Which again, like, but you as like a CFO or like somebody at that point, like with at least like some finance experience, like a lot of founders would walk into Stonegate or whatever and just have no idea what's going on and not know how to properly leverage it, or
Hmm.
not even know how to like kind of think about how to properly leverage it. Like I'm sure you
Fair.
had at least like some chops to be like, this is what we can do with this, and you might not have known it perfectly
Fair.
on day one, but
Yeah.
that's kind of how I was with Mad Rabbit, where I did equity research. I was in finance at an investment bank for a couple of years, and then
Yeah.
when I went full time, it was like, I mean, look, I was 23, so I'm not saying that like I knew what I was doing, but I at least had some semblance of like an idea of like how this might work.
Yeah. Yeah.
Um,
That makes sense. Yeah. It's a
um,
crazy industry.
yeah, yeah. So, the last thing I just want to talk about is what are you up to now? How long did you stick around? Like, did they fire you immediately? You don't need two CFOs. Like,
No,
what did you
they
do?
no, actually they didn't fire me. Flowers, what I really appreciate about them is they very much knew that the secret sauce of Simple Mills was the people. And so
Hmm.
to my knowledge, they didn't fire anyone. They really were pushing to keep
Oh,
the
good.
whole team and had,
Wow.
structures in place to do that. I just personally like I said, I had three kids, and I think after the deal, I just wanted to take some time and spend some more time with my family. So took some time off. And now I've been consulting, advising earlier stage brands. I've always had a passion for those early stages of the business, and
Yeah.
I think about Simple Mills and like those first few years were just some of my favorites. It was just so magical. So it's been fun to kind of relive it with some of these earlier stage brands, but um, not have the same stress of staying up all night worrying about cash. It's fun to kind of
Yeah.
let it clip it.
You get like the fun part without like am
Exactly,
I yeah,
exactly. Oh
the
yeah,
existential crisis.
exactly. It's been a lot of fun.
What kind of brands are you working with? Is it like
Um,
similar to Simple Mills or just kind of all over the board or what?
yeah, different categories, but kind of similar retail brands, etc., food companies.
Okay. Cool. Well, where do the audience find you? Are you like kind of you're on LinkedIn, right? They can
I'm on
find you on
LinkedIn.
LinkedIn.
Yeah.
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 You do
I
like
don't have the
Twitter
same
or
presence you do, Drew.
okay.
So,
Well
but
yeah,
yeah,
if you wanna connect with Amy, just look her up on LinkedIn, and see if you can't offer her some joy without the existential dread of being an advisor these days. So, Amy, thank you so much for joining us. This was really fun to unpack the journey. Congratulations on everything that you
thank
guys were
you.
able to accomplish over that decade. It's truly one of the coolest stories of the 2020s in my opinion. So, appreciate you taking the time to come here and share with us.
Awesome. Thanks so much for having me, Drew. This was fun.
Yeah, thanks to you.